Well, here we go. The federal Liberal Party in minority, supported by another small group, has made another reversal of policy. And is that a good thing for them to announce something and then change their mind just a minute before everyone was planning to react to their move?
Well, what do they call that usually? Isn't it called a flip-flop?
It's called a flip-flop. Yeah, it's called I changed my mind based on finding out that it was conceived by the public to be a dumb idea. And so whoever told me to do it in the first place gave me bad advice.
Well, in this episode of Real Estate Chat with
Jonder Perez.
and Robert E., that's what we're going to be talking about. So let's put this flip-flop article right there. So CRA's Bear Trust flip-flop costs nearly $1 billion. Robert, take us through this, and we're going to share this in our description. Make sure you like and subscribe to our channel.
Okay, well, this is sort of an overview article. You can see it's from May the 3rd. It's from the Niagara Independent. And the chap there describes what was going on with, they wanted to change the rules on a bear trust. A bear trust is if you enter into a partnership, into an agreement with a relative or with another person, and this was happening all the time where someone putting up money and they were going to either put their name on the mortgage or on the title or only, as joint tenants, not tenants in common. I'm sorry, the other way around, common tenants in common, not joint tenants, of 1% of value. They were going to tax that. The CRA was going to attack that. So it was all announced, it was all ready to go. And then they changed their mind a week before implementation day to say, no, we're not going to do that. Now, how did they find that out? They found that out because finally, I guess they announced it and polled saying, are you crazy? You know how many people have done that to help their kids try and buy a house? What a stupid policy. And so they canceled. So I guess two wrongs can make a right, but it's no way to run a government. So these amateurs who have proved themselves to be amateurs made a colossal mistake. And it was pointed out in this article. And then that just reinforces the move that's also been announced. We talked about it in the colossal errors contained in the budget of spending and of taxing and all kinds of stuff. Now, the Rhodes Scholar in Slavonic Studies that's been given the Minister of Finance portfolio for some reason. She's a journalist. That's all she is. She doesn't know anything about money or finance or politics. Came up with a budget that included an increase in the capital gains tax. 2 weeks ago, 3 weeks ago. Now they've said, okay, we're going to keep everybody's egg on everybody's own face. And they've split out that capital gains measure from the budget implementation bill so that the Parliament can vote, Jagmeet Singh supporting Trudeau too, to pass the whole budget full of spending and full of tax cuts, tax increases. But the issue of the capital gains will be considered separately, and it'll either be delayed or it will fail. And anybody who supports capital gains will vote for it, and anyone who doesn't will vote against it, and it will fail. So it won't be implemented, thank goodness.
Well, so
June the 25th, my goodness.
I have a couple of technical questions for you, Robert.
Uh,
You know this topic better than I do. So on the Bear Trusts,
yeah.
uh, let's say, for example, you have kids and you put your kid, this is your primary residence. Let's say you've got kids, you put your kids on the title. That's not considered an investment, right? So those are not being taxed.
The threat to tax Bear Trusts was withdrawn at the very last minute. So anybody who has a child that they put on and they're 92 years old and they put them on title, what they're doing that is to avoid the tax that accrues to probate, because now it'll just be survivorship passed directly to the child who will own the property, and grandma and grandpa will not have to go through probate. That's just the way property works. So it was an ill-conceived idea that was withdrawn. So all of the uproar that everybody went through, just like all the uproar everybody had to go through for this capital gains tax, they didn't have to go through. It should never have been done in the first place. So when it was withdrawn, it's just going back to zero.
Well, it's also mentioned on that article, if you saw that glaring image of the decision makers behind this implementation of this tax, is that it's not meant to punish, but if you are, okay, let's use different words, I guess. If you're penalizing, or if you're okay, so penalizing is also punish. What's another synonym for taxing somebody? If there's a tax on what you're gaining, what is the incentive to gain? Because I've had casual conversations with some of our hallmarkers as realtors, and basically said, "And what's the point of buying property? Why would a doctor buy a medical building, and then on the sale of such a building, if they incur such a tax, like what would motivate them? Obviously, you would net more still if you sell, but the tax of implementation of it, of course, means the government makes a bit of the government's your business partner, your investment partner, basically."
So no one would recommend changing the income tax rules for capital gains with a 2-month lead time unless they didn't know anything about economics, didn't know anything about fiscal policy, didn't know anything about capital investment, and were incompetent fools. But that's what we had to live with. Gone away now. Thank you. Goodbye. Or it will go away. It will go. Thank goodness.
Right, there it is. I mean, maybe it's just, I mean, you gotta, when you spend money, you've got to make money somewhere. Maybe this is just something they
Well, it's called changing the rules and the changing horses in the middle of the stream. No one recommends that because you planned on a certain amount of return based on the tax environment that you entered into, and now they change the rules on that in the middle of the game. You get very upset. And
What's
so,
what are the chances then that some investment holders holding such property won't sell and just accumulate because of not wanting to pay this tax? If
well,
such a
there
tax.
was a lot of discussion about let's accelerate some sales, let's move up the closing dates, let's beat the date on this, because if you're going to get a 1.5 or $3 million gain or more than that, then it's a big chunk that all of a sudden, you may be contracted to sell it for November, and then I'm all of a sudden, what?
No, I mean, moving forward, if such a tax were implemented, what I'm saying is that why sell it and just keep, I mean, obviously there are reasons why people sell property or or companies sell property, but wouldn't that reduce the number of properties being sold if such a tax meant that it would be better for me to just keep it and maybe keep refinancing or borrowing against it to accumulate more property? So
Yes, yeah.
isn't that
The strategy would change based on the tax environment. If it's advantageous to keep, you keep. But anything that's taxed disappears. So if people are investing in real property, then that investment will disappear. They will go to other countries where they can do it without the burden
there you
of the
go.
tax environment changing on it.
So whether it's a punishment or not, we're going to find out. So thanks for watching this episode of Real Estate Chat. If you're an accountant or if this is your field of expertise, we'd love to hear from you. Robert and I are commenting it from the perspective of real estate brokers. So if you're an accountant and you want to chime in on discussion, that would be very valuable to our community. Thanks for watching. Take care and bye for now.
Thanks a lot. See ya.